All right, guys. Hopefully you guys can hear me. Holy shit. All right, there you go. There you go. You guys seem happy. All right, all right, all right. I'm going to mute all you guys. All right. Let me pull up the chat. Let's get chat. Michael, don't text me. Hold up. Let me put my phone on DND. All right, you guys ready? Holy fuck, 350 people. All right, guys. Look at all these people typing. Will it be recorded? I don't know. It should be recording right now. All right. I'll wait for like 400 or 500 people to show up. They'll be in the chat. All right. Dude, I really had to pay fucking Zoom $2,000 to be able to let you guys in. All righty. I'm going to share my screen. Can you guys still hear me? Hello? Hello? I need someone to say yes. Can you guys hear me? Yes. All right. Can you guys see my screen now? All righty, tighty. All right, let's go. Let's go. All right, yo, guys, tweet, or if you're in my Discord. There we go. All right, here, let me ask my mentees if they can hear me. Can you all see my screen? All right, bet. All right, let's get started, boys. Ooh, I'm excited. How many people we got in here? 486, that's it? All right, whatever. Fuck it. Let's start. All right, guys. Welcome to Shinobi's, Shinobi, first trading boot camp for options. I'm super excited to bring it to you guys. This is from Samurai Investments, my personal Discord. So, yeah, let's do it. Oh, my goodness. All right. I'm just going to send out one more tweet. All right. Oh, my God. Everyone's so excited. All right. So this one, we're going to be going over the basics of options. We're going to be learning some new technical stuff. And at the end, we have some advanced strategies that we're going to be teaching you guys, courtesy of Samurai Investments Corporation. Table of contents. So here's everything we're going to learn in this class. We're going to learn an introduction to options, just super basic stuff for people who really want to learn, options or try to get into them. There's a lot of, intimidating things that come with starting trading options. So we're going to go over premiums, expiration dates, strikes, calls, puts, in the money, out the money, at the money, Greeks. And I know that sounds like a lot, especially if you're new. If you're a little advanced trader, you already know all this stuff, right? We're going to be going over the Greeks, which a lot of people take as like, oh, whoa, this is scary. It's not that scary. Learning some TA, some candlesticks, support and resistance, trends, pullbacks, breakouts, reversals, volume, and especially level 2 and tape. This is what we want, right? This is the main thing I want you guys to get out of this if you're an advanced trader. So we're going to go all of that in the next hour. So all of this is going to be taught in the next hour. So let's get started. Number one, options, right? We're going to be doing an introduction to options. So now what are options, right? Options are a derivative because the price is linked to the price of something else, right? So the price of options are directly linked to, or indirectly linked to the stock price, or what we call the underlying. If you're buying an options contract, it grants you the right, but not the obligation to buy or sell an underlying asset at a set price or before a certain date, right? So what that basically means is Let me get here. All right, so in options, right, here is the stock. So we're just gonna say here is the stock, right? The stock has something called options, right, which are basically contracts that are pretty much betting on the fact that the stock will go up or down, right? So if you buy a contract that says the stock will go up, right, and the stock is going up, as the stock goes up, your contract also increases in value. So you're not buying the actual stock, you're buying a contract that says that if this stock goes up, your contract is going to be worth more, right? So what you do, you buy this contract from a seller and then you sell it to another buyer, right? So you're pretty much middlemaning this because you're trading it. So options, characteristics, expiration dates, right? So when you're looking at options, there's a bunch of things you need to go over because options have a lot of different types of I don't know how to break it, like just like there's a tree of life there's a whole ecosystem when it comes to options, right? Expirations, Greeks, all that type of stuff. So we're going to start with expiration dates, which is the easiest to understand. All options have an expiration date, which means they no longer exist or can be traded after they expire, unlike shares of a stock which have no expiration date and can be held forever, right? So if you guys, this is the app Thinkorswim right here, right? We call it TOS. Basically what you're seeing here is that these are all contracts here, right? These aren't contracts per se, but these are what you call, the expiration dates for the contract. If you open that up, you're going to see a bunch of numbers, a bunch of information being thrown at you, but in its consolidated form, basically what you're seeing is the option dates on what they expire, right? So this January 14th contract, okay, I buy an option for whatever the stock is, right? It doesn't matter. That contract, if I buy the January 14th one, expires on January 14th. That means after that date, the contract is wiped from the entire, trading system. It doesn't exist anymore, right? So this is when the contract expires. So you have January 14th, 21, 28, 4, 11, 18, February 25th, March 18th, April, right? So you guys have all that written out. And the reason we're going over expiration dates is because they come into risk management. Expiration dates can decide if your right? They give you a little bit of leeway for the stock to move in your direction for you to make profit. If you buy January 14th contracts, right, on January 13th, you have 1 day for that contract to make the move you need it to make profit. Whereas if you get 25th February, the stock, you have an entire month and a half for the stock to make the move you need it to make, right? So definitely be on the lookout for that. So expiration dates are super important when it comes to choosing an options contract. Now, if you guys are getting a little scared, stay with me, especially if you're new. This isn't that hard, right? You're going to understand. This is going to be like the back. You're going to be able to read this stuff like the back of your hand in the future if you guys are just starting off. Options characteristics part 2, the strike price, right? In its technical definition, an option can be converted to buy or sell shares of said stock at an option strike price. If my call option has a strike price of $105, I can use the option to buy shares of the stock at the strike price of $105. Now that sounds confusing, right? Because it is. So this is basically going over exercising a contract, right? In its bare form, right? So ready, we have 105. Say your stock is at $100, right? And you think the stock is going to go to 105 in the next 7 days or in the next 5 days, right? Like say you're buying it on Monday, you think by Friday, it's going to go to 105. So what you do is you buy a 105 call, which means the stock is going to go up, right? Expiring on or that Friday. And on Friday, it hits 110. The stock goes up 10%. It's $110. You could take profits on your calls, right? So if say you bought these calls at 0.7, right? You bought them at 70 cents per. So you basically bought for $70 because you have to multiply by 10 or 100, whatever it is, right? This is literally $70, right? So you buy for $70, and by the time it hits 110, this contract is worth 1.25. It's worth $125, right? So that's only if you bought one. So what you can do is instead of just taking the profits here, you can exercise this strike price, right? Meaning you basically say, okay, I'm going to buy the shares of the stock at the strike price at 105, and you have 100 shares under one contract. One contract equals 100 shares, right? So once you have that, right, you're going to buy it at 105. You're going to buy 100 shares at 105, and then the price is already at 110. So you're already up like 5% on your investment right there, $5 per share you have. So you're already up $500 there, right? So that's if you're going to exercise it. I don't really know anyone who ever exercises their options unless you're like Nancy Pelosi or like a big dog in the game. Very rarely do you see people exercise their option. You're usually just flipping the contracts. You're buying them, you're selling them, you're buying them, you're selling them. You're never really going to exercise if you don't have that much capital to put up. So why don't we use strike prices that way, right? Converting in options to shares is called exercising them, right? Rarely will you ever hear of someone exercising contracts like I just said. Options, characteristics, strike price. Once again, think of your strike price as your price target for the stock, like your levels on the chart. Apple broke the resistance at 170. Your price target is 172.5. You would pick the closest strike price to that number, right? And luckily, Apple has 172.5 calls. And as long as it has volume, options contracts have volume just like stocks do. If your contract has very little, no volume, your contract simply won't move nicely with the stock. Now, what do I mean by that? Say you buy an options contract, right? And it has no volume, and the stock is completely ripping, and you're in calls, and it's supposed to be going up, right? And that contract has no volume. Your contract isn't going to move that well because there's no demand on that contract. So that's why when you guys see these people on Twitter post low volume contracts, stay the fuck away, because you guys are the liquidity exit for that, right? So what you want to do is find the ones with the most volume that are, around the price target you have. So 172.5 is right here. It's the contract, the stock is at 170. You hop into the 172.5s. Apple has some of the most liquid option chains there is, right? So you can buy any call or put on Apple and it'll have volume on it, right? I'm just saying for other different types of stocks that might not be as popular as Apple, always look at the volume, because volume will dictate how well those contracts move. Now we're going to be talking about premium and options contracts, right? So this is basically dissecting an option, to its bare, to its bones, right? So a share of a stock with a price of $150 can be purchased for $150. If an options contract worth 1.5, I can't buy the option with $1.50, right? You actually need $150. So this is because options trade 100 shares of a stock. So let me actually highlight that for you guys. 100 shares of a stock, right? Each contract holds 100 shares of a stock. So you need to multiply the price of the option by 100 to get the premium. And the premium is what you pay. So here's an example. If your contract is worth 15 cents, you're not paying 15 cents. You're paying $15 for it, right? If it's 1.5, you're not paying you're not paying $1.5. You're paying 150. And if it's 15, you're paying 1,500, right? So remember that, right? When you're hopping into a contract, don't be like, oh, I'm trying to buy this for 15 cents. Why is it charging me 15? Oh, my broker's messed up. No, it's just, 100. Each one contract equals 100 shares are binded to that one contract. So say this one contract is worth 0.15, those 100, right? 0.15 per share in the contract, right? So each share that the contract has is worth 15 cents, right? And then you do 15 times 100, you get $15, right? So that's like the bare minimum of that, right? And I'm going to change my color to black so you guys are able to see it better. Options characteristics part 4, calls versus puts. Now this is how you decide the direction of what you want your options to do. So calls mean you're betting that the stock will rise. If the stock rises, you will make money because your bet is right. If the stock price falls, you will lose money because your bet is wrong. And that's me breaking it down in the simplest form, right? Calls mean you want the stock to go up. Puts mean you're betting that the stock price will fall. If the price stock falls when you're in puts, your money is going to grow on your contract. Your contract's going to increase in value. If the stock price goes up, you're going to lose money because your bet is wrong, right? Calls mean you want the stock to go up. Puts mean you want it to go down, right? So that's pretty simple. Calls up, puts down. Very, very simple stuff. Now, we're going to talk about in the money, out the money, at the money, right? Now, if you guys want, this is going to be recorded, but definitely take a screenshot of this. If you guys are super new to trading options, We're gonna go more into hold on, what did this guy say? Let's see what he said. I want to open up chat real quick. All right, yeah. So if you guys, I know a lot of you guys already know what options are, already know this boring stuff, but this is really the beginning of this little like webinar is really tailored to the people who don't know anything about options and just breaking down the bare minimum, or people who are starting and are just trying to learn a little bit, so don't be a dick in the chat, right? Because oh, I know what a fucking call and put is. Like, dude, don't flex your dick. Everyone knows what it is, right? This is for the people who don't, so let them learn, all right? Options characteristics: in the money, out the money, at the money. For calls, in the money means the strike price is below the stock price, right? So say the stock is worth is $110, you buy a 105 call, that's in the money because it's in the money, right? It's the strike is below the stock price. Out the money means the strike price is above the stock price, right? Stock is 110, you buy 115 call, it's out the money because it's away, right? Now, if it's at the money, right, you have 110 stock price, you buy 111 call, right? That's at the money because it's very close, right? Puts is pretty much the opposite, right? Puts, strike price is above the stock price, right? So 75, you want to go in the money puts, right? You're buying an 80 put, that's in the money because it's inverted, right? Out the money, so it's 75, the stock price, you're going $70, that's out the money. At the money would be like 74 if the stock price is 75. Super simple stuff, right? Which contract do I take? Part one, right? We're going to decide on volume and open interest. If you guys want your contracts to move, you need volume. You need volume in order for your contracts to, give you a nice entry and exit, right? Open interest shows you the amount of open contracts being held at a certain price, right? It shows how much interest is in the certain strike. So you guys will see a lot of people be like, yo, what's better, volume or open interest? Open interest just means how many contracts are being held from the previous, couple of weeks, right? Volume is how much people are attacking that strike price or buying that strike price that specific day. Which contract do I take? Part two, expiration and bid and ask, right? Expiration, choosing the right one depends on what type of trade you're taking. If you're taking a day trade, you might want the closest expiration, unless you're super close to the expiration, where we're going to get into later, right? If you want to swing and you're thinking that it's going to take a little bit for the contract to move, you're going to go a few weeks out, right? Maybe even a month out. No, I won't use text boxes, bro. Everything's written out. All right. Actually, I might. I feel bad. But yeah, if you're day trading, right, it's never a bad idea to get a few like days or weeks out. You never want the same exact, like if you're playing 0 days till expiration, meaning this contract expires that day, those contracts are going to be so volatile. You're going to be down like 30%. You're going to be up 30% in literally minutes. It's super scary, super volatile. Don't recommend it for new traders at all. So if you're going even day trading, go like 1 or 2 weeks out and stay safe. Bid and ask spread, right? Same as stocks, right? It's what people are buying and selling the stock at, right? You want to look for the smallest spread, right? Because if your contracts have a wide spread, right? Say it's 100 to 150 and you buy at 150, you're already down so $50 per contract because no one's buying at 1.5. All the market makers and people that are buying at $1, right? Instead, so let me write that out. Let me pull out my pencil. So say the bid and ask is 1.0 to 1.5. You're going to have to hit the ask to buy it, right? So you bought in at $150. You're already down $50 because the only thing people are buying it at is 100, right? So they're buying here. You just bought up here, right? So what you want is something like this, 1.05 to like 1.10, right? Where you buy at 110, you're only down like $5 like off the bat, right? Or you could just get something like super, super like tight, like 1.21 to 1.22, like Apple. Like you want the tightest bid and ask spread possible. So that means there's volume on it and there's, liquidity to where you can buy and sell super easily. And you won't be down in a horrendous amount right off the beginning. Now, Greeks, theta and delta, the only Greeks you really need to know. These are the ones that are directly impacting your contracts. And, especially if you're a beginner, these are the most these are the ones that you're going to be hearing about a lot. So the other ones you could do research on, but these are the main ones, you know, everyone's going to tell you need to know. Theta. Theta refers to the rate of decline in the option value over time. Theta is called time decay. Theta equals time decay, right? So the longer you hold a contract, theta is going to eat away that premium on your contract, making it go worth less every single day until expiration, to where it inevitably closes at zero, right? 0 dates till expiration will be very volatile, and your contract will lose a lot of its value due to theta, right? Your option will lose value as it gets closer to its expiration date due to theta, right? So due to theta, you will lose value on your contracts. Now, this is the money taker. This is the money maker. Let me see if I get a look at that. Look at that highlight. This delta measures the impact of a change in the price of the underlying. I know that sounds intimidating for new people. What's the underlying? The underlying is any stock you're playing options on. So like Apple, right? This would be considered the underlying if you're playing calls on it, or puts, right? This is the underlying, the stock you're playing the option on. The rule of thumb is that, you know, the higher the delta is, the more likely the stock ends up, or the contract ends up profitable. Out of the money options will have the lowest delta, while in the money options have the highest delta. Now the cutoff here is in the money. In the money is equal to more. You have to pay more for that higher delta, right? Out the money, you have to pay less for that, right? So people are like, oh, why would I go out the money when I can just go in the money and make more money, right? It's because they cost like 5 to 10 times the amount as out the money do. You can still make money on the out the money as long as the stock makes a move, right? But in the money will just pay more, but you're also putting up a lot more capital to make that capital, right? So it's lower risk going in the money and a little higher risk going out the money. As long as you're not too out the money, you should be good. I'd recommend like $5 to $10. I go like 10% out the money usually. Now, all right, tell me how you guys like that. You know, we just got through with that. Take care of my boy Michael. I love Michael, bro. From W. All right, guys, let me freaking get my breath up, bro. I need to exercise. W. Guys, I can't see any of your questions recording this. Oh, my neck hurts. That's 600 people here. Big dog. How much is good volume? Good volume, it depends on the contract, right? If the contract has, you know, 0 volume on everything and there's 100, that still doesn't mean it's a good, you know, I'd say like just look at the option chain and look at the one that has the most volume, right? Where do you see the volume on broker? Thinkorswim, bro. What's the best data range when buying options? Usually you don't even have to look at that if you're just gonna trade them. Will the Wild F unban me from Discord? I don't know who you are, bro. What about Delta? Delta, you guys can always figure that out. Right? Delta, it's like, it's very relative. If you're day trading some, just look at the thing with the most volume. That's probably gonna have the best you know, theta or the Greeks, right? Because so many people are buying. Just look at the volume and you should be good. All right, part 2, technical analysis. Time to learn how to apply it. What are candlesticks? A candlestick is a type of price chart used in technical analysis that display the high, low, and open and closing of a security or stock for a specific period. So each candlestick represents a time, like a time, right? So this candle, let's say these are 5-minute candles. Each candle represents 5 minutes on the chart. Long green candles indicate there's strong buying pressure. They suggest the price is bullish, whereas long red candles indicate there's significant selling pressure, and these suggest the price is bearish, right? What is volume, right? You guys already know all this stuff. What is volume, right? Volume is the number of shares of a security traded during a specific period of time, and security is just interchangeable with stock, right? Each volume bar matches with each candlestick, as you guys can see here. This candlestick, this is the volume, right? The volume here is how many shares were traded on this specific candlestick. And this is on the daily. So each candle is 1 day. So this 1 day, almost 100 million volume, as you can see here, was traded on that specific candle. Volume is honestly the most important indicator in technical analysis because it's used to measure the relative significance of a market move. The higher the volume during a price move, the more significant the move, and lower the volume during a price move, the less. What the fuck did I just read? The higher the volume during a price move, the more significant the move will be, and the lower the volume during a price move, the less significant the move will be, right? Since this chart is on the daily time frame, each volume bar represents the amount of shares traded in the day. So each candle is 1 day, each volume bar is 1 day of volume traded. More volume means the move is more significant, right? Less volume means that, oh, maybe the move isn't that significant. And you can always tell that just from looking at the relative, or usually there's an SMA that you can put on that'll tell you the average volume. There's indicators that show you the average volume traded, right? As long as it's above that, that means it's more volume than usual. You guys are fucking dickheads for calling me clicks. Support and resistance, right? Support or support level refers to the price of a level that an asset doesn't fall below, right? It's considered the floor of a stock, right? If you're trying to, you're say you have a basement, right? You're trying to break through the floor, you're gonna have a hard time. You're gonna keep jumping up and down until you either break it or you just, give up and you just go up, right? So that's the floor. Consider support equals floor. So I'm just gonna say that. Support equals floor. So here's the floor. This is the support, right? I don't know. I was trying to be fancy and draw support. That's the floor, right? That is the floor. Like this is the grass. Like this is some grass, right? This is the floor, right? An asset support level is created by buyers entering the market whenever the asset dips to a lower price, right? So say stock is coming down, red candle, red candle, red candle. It hits the support. Buyers see this. Buyers like, oh, I like this. I'm buying here, right? They start buying, right? So I'm going to put B for buyers. Buyers step in. And what they do is they buy and send the stock higher from that level, right? So they bought here. Let me make this black again. This was their buying area at the support level, right? And now say in an alternate universe, right, the stock price falls below and there's no buyers there, it's going to continue falling because buyers usually would just buy up here, but now they're not. So people consider that as a support break, meaning that the floor is completely erased. The floor is no longer there and the price just keeps falling until it finds a new support. Resistance levels represent a price point that an asset has trouble exceeding in the time period being considered. I hate that this is written out so professionally. My server manager made this, so shout out Michael. You guys can see the stock is going up, so I'll make this one green. Stock is going up. It's having a hard time breaking through, right? But when it breaks through, it continues higher. Because what sellers do is they see it come to this level, they start selling. They start shorting the stock, right? And then when it breaks through, the sellers are completely wiped. They start covering their shares and it continues higher, right? And buyers and sellers meet at resistance because sellers don't want the stock above the resistance right here, unlike the buyers who want it above this line that we drew, right? That black line, if you guys can still see it, right? If price action on a chart breaches the resistance levels like right here, let me just draw an arrow right there, right? It could be an opportunity to take a long position because then it will probably continue higher with the momentum it created. Support and resistance example, right? Look at this. This is Apple on the daily. Right here is, okay, let me make my line a little smaller, make it white so it's easier to see. Right here, this line is the support, right? You guys can see how price, when it comes down to here, it bounces, right? It bounces. And when it broke through and it didn't hold, it went down, right? It went down. Now, over here, this line is considered the resistance up top. So I'm going to erase all the support so you guys don't get confused if you're new. Over here is the resistance. When it breaks above, it continues higher, right? And then you can see a resistance. You can use it. It's interchangeable, right? When it's back here. And then when it broke above its previous resistance here, it created a new resistance here. Broke above, it continued higher, right? So that's a little example of support and resistance. It's nothing too crazy. You guys will learn this more in depth, especially if you're in the premium Discord or even on my main Twitter. I post a bunch of videos and stuff. You guys will learn this. It's just a quick introduction. Trends. A trend is the overall direction of a market on a stock's price. In technical analysis, trends are identified by trend lines or price action that highlights when the price is making higher swing highs or higher swing lows for an uptrend, right? So right here, this is called higher highs, meaning the stock is going, or this is called higher lows. I don't know why I said higher highs, right? Every time it goes up, it makes a low, and then each other low, meaning each other pullback is higher than the previous one, telling us that the trend is upwards, right? So let me repeat that. Every time the stock makes a new low on the asset, or on the, every time the stock makes a new low, it's higher than the previous low it made. Like this one is higher than this one, this one's higher than this one, this one's higher than this one, this one's higher than this one, this one. This is called a higher low, which is telling you that the stock is in a steady uptrend, right? What is reading the tape? Okay, I'm gonna get to that, but let me just tell you guys, right? For that's an uptrend, and then lower swing lows is just when the stock is doing this, right? It's just in a clear downtrend, and you draw out the trend lines. It's pretty much simple. Now let me just do this, like it's that, right? Reading. What is reading the tape? Are you guys ready for this one? This is the main one I'm really excited for. How do you know when a stock is about to go up? You guys will figure that if you guys are in the Discord. Dude, you guys are gonna love this fucking level 2 shit. Let me go. Guys, does that link work? If you guys, oh, no, that's not the one. It's this one. Where's the recording? Bro, I'll post the fucking recording, bro. Don't even worry about it. Yeah, bro, it's my link. All right, you guys ready? All right, we're gonna go over reading the tape. I'm super excited for this one. All my mentees are gonna love this one. This isn't, yo, guys, for all the people in the Discord, all my students, we're gonna have an insane class with Rippy Mode and Blanco on Tuesday, so I'm super excited for that. This is just a little sneak peek into it. What is reading the tape? All right, tape reading is used to analyze price and volume of a given stock. Tape reading is the key to momentum trading, right? Order flow trading is a method that attempts to anticipate the price movement based on current orders that are visible on the buy and sell side, right? As traders, we use the tape to see where the buyers and sellers are waiting, right? With that information, we find imbalances in the tape, so we're able to make money. So here, on this thing right here, right, guys, look at this picture. Let me just do this. What we're seeing here, this you don't really need to look at. Right here was what we're looking at, right? This, right? Someone is buying this. This is a futures contract, but someone is buying it 40 here at the ask. People are buying, selling at the bid. You know, an ask order was filled. So you guys can see here from this, we can anticipate that this, whatever this, futures stock is going to continue higher because we're seeing people buy and see the stock getting hit at the ask, right? With heavier volume than it is being sold at the bid. Red, right? So ready, guys, look. Red doesn't mean that selling. It means bids are getting filled. Bid equals filled on red. Usually red is just when you sell something, you usually sell it at the bid and you buy at the ask just to get filled, right? So just know that. That's what that is, you know? It's not buying or selling, it's just at the ask or at the bid, right? And you can assume that it's selling at the red is selling and green is buying, right? I don't know who that is. How do we use limit orders with the tape, right? A limit order is an order to buy and or sell a stock at a specific price or better. A buy limit order can be executed at the limit price or lower, and a sell limit order can be executed at the limit price or higher. We use tape to identify large limit orders and sell orders at key price levels. We analyze that as an area of resistance, right? So when a stock is nearing a resistance, right? Say it's nearing a resistance, right? Say that's the resistance. It's going there. It's trying to break through. And then on the tape, we see a bunch of people buying like 100 or 1,000 shares, 2,000 shares, right? And occasionally you're going to have like that one seller that's selling like 100 shares, right? There's less selling and more buying when it's coming up to that level. You enter your call position here, right? As you're seeing the tape pick up, right? You're seeing buyers are stepping in at that resistance level, right? Hitting above this level, and then boom, launches, right? Because you anticipated the move by looking at the tape. You saw the buyer step in, right? You saw very little sellers. And then when it went to that resistance, they started buying, and you saw them hitting that price level. You buy in, and then they send it up because all their orders just got filled. We use tape to identify large limit buy orders below current price. This indicates strong support at the price point, giving us confidence to buy, knowing you have a solid support or floor. Now, this is called level 2 and market depth. All right, are you guys keeping up with me? What apps? You could use it on TOS, Webull, whatever. I'm gonna throw in the link one more time too if you guys want to sign up for the Discord. Webull has it. Yeah, it's $3 a month for that. Links don't show up. I don't know. It should show up. Oh, I have to host and panelist. There we go. Here's the link if you guys want to join up on the Discord. But ready, level 2 in market depth. We have classes that are like 4 times a week. So level 2 in market depth. Level 2 provides us with market depth and price information. Market depth is a measure of supply and demand of a stock. The depth is based on number of open buy and sell orders. Open orders, meaning they haven't filled yet. The greater the quantity, the more liquid the stock is, right? Measures real-time supply and demand, right? These are limit orders, not filled orders. So right here, you guys could see 15 and 14, right? That doesn't mean 15 and 14 shares. On TOS, it's 1,500 and 1,400. So someone on AMD, right? This is an old screenshot if you guys can't tell. Are trying to buy this stock at 47.6, right? They're trying to buy 2,900 shares times 46. I'm going to do that math right now. Don't even worry. I'm definitely not pulling out my phone to fucking search this shit up right now. 2,900 times 47. 2,900 times 47.6. That's $138,000 worth of shares trying to be bought here, right? So in order for it to break past 47.60, right, someone has, or people have to sell over 138,000 worth of shares for it to go down to its next level. And this is 4.6 all the way here, probably like $200,000 worth of stock to send it lower than that price, right? So that's how you decide, right? So you're like, okay, if it breaks 47.6, selling pressure has taken over and it's probably going to continue down. Okay. Now on the flip side, if you're playing calls and the stock has a huge seller, so say like these 6 shares, like these, so that's 6 that you add, you multiply by 100, that's 1,200, right? Or is it 1-0? I forget. But usually I use Webull, which it just gives it to you, right? Give me a second, guys. Freaking just got a text. Yeah. I just got a fucking random ass text. But yeah, you add 2 zeros to it, and that's usually how you do it. So what do the colors represent? The red price, right? That means the stock is being put at the bid. So this 4,100 shares were put at the bid level, right? Weakness, someone is unloading. This shows weakness. Someone's unloading shares at the bid price. Green means someone is buying at the ask price, right? So that's showing strength, that people are buying at right there, you know? And usually you can see like it was more selling pressure here because it was 4,100 shares being sold compared to the green where it was only like, you know, a few hundred being bought. White means it's taking in between the bid and the ask spread, right? And blue is transaction taken above the ask. And so basically that's for Dash Trader, and you guys don't have that. But on Webull, if it's highlighted in green, it means it's above the ask, and if it's highlighted in red, it's below the ask, right? So let me give you guys an example of just, you know, different types of things, right? So here is this AMD trade I took with my mentees in my private Discord, where we shorted this right here. We shorted right there because look at this. We're looking at the tape. Look at this. You're seeing 2,000 shares being bought at the ask, but you're seeing a sea of red, and you see 12,000. You see a 12,000 share seller at 134.66, right? Below the bid, because the bid and ask was pretty. Oh fuck. The bid and ask was 134.67. He sold it below, right? 1 cent below. He wanted to get filled. He was selling off the stock, right? So 355 times 134.66. That was $1.6 million sell order right there, right? So I took a short position here, and when it broke this level, it continued down. But that's pretty much, you know, how you can anticipate it. When you see big orders like this and it's coming, trying to break a support level, and you see someone sell 1.6 million, you can anticipate a downside move coming, right? So that was there. This was also on AMD. You guys could see my friend took the same exact screenshot, 12.3K share sell right at the fucking bid. And then, you know, this is for TOS, Thinkorswim, right? And this is for Webull. So Webull, you don't have to multiply by 100. It just tells you like 100 shares, 82, 300. So it's telling you there's someone buying 100 shares on GameStop at 200.84, and there's someone selling 300 shares at 201.1, right? So it needs to buy, someone needs to break either of those walls for the stock to continue on either side, right? Pretty much the rough overview. I know it's not too in depth. I'm keeping that for my mentees and my Discord students, but you know, obviously, I just want to give you guys a quick introduction. Obviously, like my freaking Twitter DMs are open for you guys. If you guys have any questions, hit me up there. You know, I answer every single DM I get. Right. And level 2 is on the right side if you hit TIA. So it shares X100. Yeah. Are you guys still here? Can you still see me? How do you see tape on TOS? You type in time. You on the right side, it says time and sales. Here's the sign up if you guys want. I'm going to stop sharing, but now I'll just answer your guys' questions in chat. Do you play in the money after Wednesday? I'm usually always 10% out. IBKR or TOS? I use TOS, but I heard Interactive Brokers buys and sells are insane. Do we need to know level 2 to be a good trader? Yes. Will you hold another seminar? Maybe. And look, you should know this 100% free game. Shinobi, when I do go green, I take profits. The stock keeps rising the next day. Bro, that's just you not taking profits on time, or you know, it's just you getting greedy. Do you do this for a living? Yes, bro. This is my full-time job. Trading is my full-time job. How do you set a stop loss for options? Just keep a mental stop loss usually. How old are you? I'm 19. Did you escape the boom and just 2021 P&L? I'm not telling you that, bro. I literally post my monthly and daily P&L on YouTube and Discord. You guys want to check that out? Why is my 5G being slow as shit? All right, guys. I'm going to call it a day there. But if you guys want to sign up for the Discord, here it is. You guys are spamming the chat way too much, so I need to spam it. And if you guys want, I will be sending some. Yo, guys, stop spamming. Everyone stop spamming. Make sure you guys check your emails after this. I will be sending you guys some sort of discount code if you guys were in here, maybe like to a few of you. Do you guys want a discount price? I'm not sure. If you guys don't sign up now, check your emails right now. I'm gonna send you guys a Discord price. It'll be like $65. You guys can sign up, so like $30 off. Check it right after I end the seminar. I'll send it to you guys. All right. See you, boys.